This video is going to be over August the 13th, or excuse me, August the 3rd, 2021. So you can see on the day we had a gap down, sell climax, test support, 2 legs up and a strong breakout, and then a channel up for the remainder of the day. I'm kind of backtracking on day, so I'm going back here. So here was August the 3rd, and as you can see, if I'm looking at the overall context, we had a spike in channel, 60-minute chart, tight trading range. We failed. We tested the bottom of support down here, so I'll draw this trend line. So when the day opened, here's the second, middle of the range, and then we broke down sharply on the first bar. So 5-minute chart, this blue line is the bottom of the trading range on that 60-minute chart down here. So coming into the day, we had a gap down on the prior day, sideways. Well, we had a gap up, sideways, bear breakout, sideways, bear breakout. It's a bear channel like that, and you could draw it. You don't have to really draw that. It really doesn't matter. And we pretty much probably went sideways. So here we opened in the middle of the prior bear leg. And when you do that, typically, in general, 50-50 chance, we're going to test up, test down. I thought we would get to the apex of this range, which is a triangle. You can call it a trading range. I figured we'd get to the midpoint, and we basically got to the midpoint there. Doji on the first bar, bull micro channel, tight channel. Do you sell, do you buy above? No, you probably do the opposite. You probably buy below and you probably sell above, but on the open, you can get a drastic sell-off or a drastic rally that fails. 50-50 chance the first reversal is going to fail. So bear bar, consecutive bear bars, 10-minute chart, it's almost a bear bar closing on its low. Odds are you'll get at least a little bit more down. We could very easily, though, get a second leg up from here and a bull bar closing on its high. 3 consecutive bear bars, probably always in short, so always in short traders will sell the close for a little more down. However, that's a little dangerous because, again, the bottom of the support is here. So we could easily just get a bear, some sort of bear breakout and reversal up. These tails are a little bit of a sign that this could be a leg in a trading range. Plus, I think the bulls that bought this low and scaling lower will make money. 3, 4 consecutive bear bars, clearly always in short. It's probably strong enough for at least a little bit more down. I would not, although traders can buy, I wouldn't buy it, but people will buy and scaling lower. Another bear bar. More down. And this is why you want to be careful about buying down here, because the sell-off can go much further than you think. And even if you use a stop, look how far you had to use your stop. If you did it from here to here, bear breakout below a double bottom, we basically went a measured move down. So anyways, it's sell the close, probably going lower, smaller bear body. So you have to kind of wonder, okay, maybe this is the breakout. Here's the body. Maybe we'll do that. Or maybe this is the breakout bar. It really doesn't matter. Sell the close, disappointment, and we have a low and short at the close to the bottom of support. The low of the mini day trading range or on the 60-minute chart. And then we have a bull inside bar. Well, we have a bull bar. This is a second entry buy, and you have to be aware. So when you get a small bar like this, it could be the low of the day. It's consecutive sell climaxes. You can call it a bear channel. You can call it failed breakout of a bear channel. It doesn't matter. I had this channel drawn here, and we could say we broke to the top of the channel. We broke above it here, so we're going to test the bottom. Well, the bottom of the channel could be here. And when you look at it like this is a broad bear channel. Here we broke above the top. We tested the bottom. We're breaking out below the channel, so maybe we'll test the top. So you can look at it that way. Whoops. So let me go back to where were we? There we go. So huge bull bar, and at this point, it's clear that we're always in long. It's a possible second leg trap, but when a bar is that big, the odds are we're going to go higher, and this could just be, as it looks, a sell vacuum, test of support, bottom of the range, bottom of this channel down here. Another big bull bar, so it's big down, big up, so you could just start to go sideways. But when you see, when I actually redraw this channel and explain something, whenever you see a bear channel that's broad and you break above it and you test the bottom and you break below the channel, especially when the channel's been going on for a while, you want to be careful about seeing a strong rally that like this. In other words, what I'm getting at is people will sell when we test the channel line here. Maybe they draw from here to here, we're testing here, they start selling. We broke above this channel line after it's been established here, here, and here. We broke above it here and failed. Traders will fade this. Just as when we start to go down here, they'll take a channel from here to here, draw a parallel, which is this blue channel line. And when we start to test it, what they'll do is they'll start buying at it. But when you start to see this, bear channel, bull flag, be very careful about selling at the trend line because we could easily break above it. I'll just leave this here for now in case I want to talk about it again. So who's going to buy that? Probably nobody, but some traders will sell more higher, and we may get a deep pullback just like that. So why did I mention that? Simple. Also, traders made money buying this low. Where was that? Oh yeah, so here, so they'll sell this high and they'll look for a bear bar and they'll sell more. And look what happened at the low of that bar. We tested 50% and then we ended up going a little bit lower. You can argue some traders will sell this high and scaling more higher. They got out break even. And other traders, maybe they buy here, they might buy more above the bull bar, so they buy this high, they buy more above, a bull bar here, and they get out, break even there. And there's many ways you can look at it. Really what's going on is basically a two-legged pullback, bulls bought, and we're probably going to break to a new high. Also buy the close, bulls buy, scaling lower. Now we have a second entry short. So what do bears look at? Bears are saying if we're testing the top of the channel, second entry short, this is just a second leg trap and we're going to get a new low. And there's probably a 40% chance of that happening. I mean, this, as strong as this rally is, there's a 40% chance that we could sell off and get a new low of the day. So it's a reasonable buy. And if I was trading always in, I'd get out of shorts probably above that bar. I'd probably get out of shorts, but longs above this bar. Didn't trigger. I'd definitely get out of longs above that bar, or as it's going up. Maybe go long here or during the bar. A lot of people will, when they see this bar forming, they'll flip to a 1 minute chart and wait for 3 or 4 bear bull closes and buy, and scalp out and then buy again on the 5 minute chart when it closes. If I was long here, I would get out of shorts below this bar. I'd actually get out of short. I'd get out of longs no matter what below this bar. Aggressive bears will sell, stop up there, and then when they see this price action, they'd get out of break even and probably wait, or they'd get out above this bar. That's the way I would treat it. Double bottom, you can call it high 2 buy, high 1, high 2 with this double bottom over here. Bulls will buy, maybe stop down here, or they'll wait, buy here. At this point, we're trying to break, we sold off from the channel, trying to sell off. We're not getting far below the channel, and you have to be open to the fact that this could be some sort of, I'm going to start kind of removing these. This could be something like that. You can draw it that way, you can draw it this way. It doesn't matter. We're starting to go sideways, and we're probably going to break above this channel successfully. And there we go, we did. So always in, maybe you buy again above here, you buy here, stop down here. Breakout bar, follow it through, probably going a little bit higher. Big bull bar, you take profits, you certainly can. Strong enough rally that we're probably going higher, even if we do sell off, but where's your stop? It's probably, it's certainly here, probably more lower. A lot of traders that bought here and put a stop down here would not allow, they wouldn't get out here. They'd get out quicker. So if you get a bear bar and you get consecutive bars, 3 consecutive bars, they'd just look to get out. So inside bar, No reason to get out yet. Do you get out here? You can and look to buy lower. Nothing wrong with that, but still no reason to get out yet. But the risk is big, so a lot of traders wait for a pullback and sideways, kind of like this. This is traders taking profit. So a lot of traders will sell. They'll sell above here. They'll buy, sell out of shorts here, and they'll see this. And a lot of bulls will buy for a scalp, and bears will sell for a small second leg down, and we'll start to kind of enter a pullback phase. So just like this, a lot of traders will use this sell-off to get long again, and bears will sell to scalp out. So we're trying to get close to the moving average. This is why you want to be careful about, by the way, selling in here. The sell-off's limited, so a lot of traders, they'll buy, wide stop, buy more lower, scalp out, or they'll just buy and stay short. There's no reason to go short here. There's no reason to go short here. There's no reason to go short anywhere in here, even here. So if you get out of longs below here, you buy again here, and probably move your stop down here at this point. 3 consecutive bear bars, maybe you move it here. Do you get out of shorts here? You can. It's a wedge. 1, 2, 3. Testing down here, you could get out and look to buy lower. Maybe 4 or 5 points lower, nothing wrong with that. And if you got out here, maybe you get a second entry buy, you buy there, stop down here. And we're just kind of channeling up. So what happened here? Well, we haven't touched the moving average since down here. You can argue we touched this. It's 93.6 is the moving average, but 93.75 is the low. So one could argue we didn't touch the moving average here. So when the first time we touch it, the trader's going to buy. And that was pretty much the majority of the day. So, and you could, start drawing trend lines. You could draw that. We broke below it, turned up. So then maybe when we turn up, you draw that line, and then you could draw something like that. Maybe even like that. It really doesn't matter. It's a tight channel. Tight channels are the breakouts on higher time frames. So again, always in. Maybe you sell, start selling closes here, stop up here, get out of longs above here, get out of shorts above here, aggressive bulls buy, or they buy here or during this bar. No need to get out here. Certainly get out of shorts below this bar, or you get out of longs below this bar, aggressive bears can sell, stop up here, and always in. It's clear, it's still always in long, and everyone always in short, so in theory you got to get long again. So you buy here, stop down here. No reason to get out here. This is a minor reversal, so if you do get out here, you're more or less looking to buy again lower. You're not selling here to go short. If you are, you're selling above bars and scalping out. You're not shorting here for a swing. So since you're not shorting here for a swing, that means it's a minor reversal, and minor reversals form trading ranges. So when it goes lower, buy again. Sorry about that noise. You're long, and again, minor reversals. These are all minor reversals. In theory, you could just stay long. We're not breaking below the moving average, so that's all I'll say about this day. So overall, easiest trade of the day. You probably buy here, and probably get out here. And the reason being is here, this technically is a higher low major trend reversal, but it's not enough bars. And usually when you get a strong move like this, and it's going to be a strong enough minor reversal to lead to a major reversal, which we did get over here, you'll often have to go sideways and form a better bottom. So here we have a double top, we sell off, form a double bottom down here. Now we have a credible double bottom, higher low major trend reversal, and it's also a head and shoulders bottom, left shoulder, head, right shoulder. And that's a reasonable buy stop down here, betting on a breakout and then a spike, a breakout, spike, pullback channel, which we got here. Hope this helps. Comment if you have any questions.